From the office of J.D. Power Valuation Services, this is your monthly industry market update with Senior Manager of Market Intelligence, Larry Dixon.
Used vehicle prices were exceptionally soft in February 2017. Prices of vehicles up to 8 years old fell by 1.6% compared to January, which is rather significant considering that prices are normally flat, if not up, in a given February. And it's only the second time in the last 20 years that prices have fallen over a given February. And the last time that it occurred, prices ticked down by 0.2%. So really they were essentially unchanged. So this February is very much an outlier when you look at it from a historical standpoint. The big decline that we witnessed in wholesale prices in February led to an even bigger decline in our used vehicle price index. The index fell by 3.8% compared to January, which is the biggest decline that we've seen since November 2008, when prices fell by 5.5%. And if you'll remember, that was when we were in the depths of the Great Recession, so fairly significant from a historical standpoint. Why did prices drop as much as they did? We can point to three things. One, manufacturers dialed up incentive spending by double digits yet again. It's been more than a year now that manufacturers have increased incentive spending by double digits year over year. Two, used supply continues to increase. Late model supply was up by 6% in February relative to January. And three, there was a new tax law that was enacted for 2017 that prohibited refunds distributed to consumers if they were filing based on two tax credit types. And because of that, that put a lot of money on the sidelines that normally would have been in play throughout the majority of the month. We expect that prices will be a bit firmer in March and April than we had originally anticipated. We expect that prices will rise by 2.5% in March before declining by about 1% in April. Both of those figures are roughly a percentage point stronger than what we had anticipated back in January. And we believe that things will be a bit better than originally expected in those months because the pent-up demand or the funds that were held on the sideline in February will help to increase demand a little bit more in March and in April.